Hello, everyone. Welcome to the Pre-Seed Show. It's a show where I talk to successful founders to better understand what it was like when they were first getting started. Because very often for first-time founders, the tough part is getting to traction. Today, we'll talk to Alexi Robichaux. He's the co-founder and CEO of BetterUp. We invested in BetterUp's earliest round about 7 years ago. And since that time, the company has raised hundreds of millions of dollars in venture capital from amazing investors like Threshold, Iconic, Lightspeed, and Freestyle. Now, while Alexi has built BetterUp into the success that it is today, it wasn't always like that when they first got started. He had to confront some pretty tough questions. How do I look for a co-founder? How long do I keep working on the idea? Are there better ideas that I should be looking for? How do I raise money? How do I recruit? All of those things that first-time founders go through, these are pre-everything questions. So without further ado, let's get into it. Alexi, welcome to the show.
Thanks for having me. I'm excited to be here.
My first question, I guess, is when did you know you wanted to be a founder? You've done amazing things in your career, but even before BetterUp, how did you know that you wanted to start something?
Yeah, I think I was always starting something, even as a kid, starting little businesses here and there. I don't think I ever had the concept of like, oh, that can be a job. I think I still was like, oh, he's doing this, and it's like I don't know why. And didn't even know the concept of entrepreneurship. Um, and so, although I was doing entrepreneurial things, starting businesses, helping to start nonprofits with some friends, I still kind of just thought I needed a real job. And so it really wasn't until I had left Disney and was doing some consulting with some of the executives. We had started a consulting shop and we ended up consulting for a couple VC-backed startups. And then I was like, oh, wow, like there's this whole world. I had been a coder in high school and taught myself to program. And I was just like, I had no idea this place, Silicon Valley, existed where people who like technology like myself, like to build things like myself, can start companies that are focused on that. And so and then it was like, oh yeah, I guess I have kind of been doing that. I just, always thought that was like a side gig, and I don't think I ever took it even that serious myself. It's like you could do this one day. I don't know why it just never transpired. So that was probably, that was like early 20s probably for me when it was just kind of hit. It's like, oh, you can do this.
Right.
And I knew I didn't know how to do it, so I found my way to a startup in Silicon Valley. And part of that was, hey, I really want to learn from a founder and understand what it's like so that, I could do this one day.
Right. So your path was learning from other successful founders. I guess you were talking about Social Cast, right?
Yeah.
And that's where you went. Tell us a little bit about how that time at Social Cast and then eventually VMware influenced your interest in coaching and mentorship. I recall that you were fairly young. You were a fairly young executive at VMware,
Yeah.
interfacing with the CEO and the CXOs, and that must have been a lot to take.
Yeah, it was pretty stressful. I was definitely underskilled to the job. It was, a wild ride, and that absolutely I got a lot of exposure. I got a lot of access to our large customers, to their C-suite, our own C-suite, which was awesome. But I think I was like 25, 26 at the time, and pretty overwhelmed. Now, I had already had some exposure to coaching and mentorship because in my free time, Eddie, my now co-founder of BetterUp, we were coaching and mentoring high school students after school. But again, this was a nonprofit setting that I had helped to start. It was just kind of like passion work for us, really important work for us. But then when I was at SocialCast, when we went through the acquisition by VMware, when I was this very young executive, it was this kind of mirroring of, wow, like I'm now feeling like the pressure. I'm feeling the trials and tribulations, and I'm looking at myself supporting these students with young professionals like Eddie, and they have a way richer support structure than I have. And I'm a young executive. I have more economic means as a result of that. But I'm actually doing worse subjectively in terms of my well-being, in terms of maybe having a sense of purpose and fulfillment. And I'm super stressed out. And so it was this kind of like perfect storm of this thing that had been my passion to help others. This thing that had been my passion, I thought, around building high growth startups, which I did enjoy. In this moment, I realized, hey, I need to find a way to connect these two for my own well-being, so I can continue to just be dialed in, focused, and calibrated.
That's right. That's a gem of a like an insight, which is like you had a personal passion. You started this organization when you were young as a personal passion, side project, a hobby, something that you felt personally excited about, and then you kind of connected that dot to your professional
Hmm.
experience, and you found in the
Yeah.
professional that would be a great application in the professional setting also, right? Was that the unlock in your mind
Yep.
about the idea?
That was the unlock. I think the unlock was essentially, wow, I need this. And it didn't exist, right? And so I was in a world of hurt, and I took some time off, and I was spending a lot more time with the students. So I was getting more intimately involved in how we're orchestrating their care, what are the different subjects, reading more different types of leadership, social emotional learning, things like that, which were really fascinating to me. For me, the nonprofit had always been an area where I was able to give back to others, but also just kind of geek out. And because it was like, you know, not my job, it was like a playscape for me, and that like I could get really creative. And when I was then not working, I was able to really do that, but I was starting to self interface and be like, wow, I could benefit from this. And that started me looking for help. And to the heart of your question, I couldn't find it. I went to
Right.
therapists and it wasn't quite a fit. I went to coaches, it wasn't quite a fit for a host of reasons. And so I think the unlock was, well, what do you need? What if
Hmm.
you just kind of made that for yourself? And as I did that and started showing it to a couple of people, I had been building product for a while then. So I was like, I have an inkling that others may like this, people like Eddie, other young professionals. And so when we started BetterUp, we actually thought it was just for millennials. We were millennials.
Right.
We thought that would be the only people who used it. And we were like, that's a massive market, should be good enough. We're kind of the future of the world. That'll be great. And it was
Right.
actually, we can get to this. It was actually customers who were like, why are you saying millennials? Like everyone would use this. But it really started from this place of, I honestly was just building it for myself. I kind of wanted part of therapy, and I kind of wanted part of executive coaching, and I couldn't find that in the world.
Right, right. We'll come back to a little bit more about the ideation process and customers. But before that, you mentioned Eddie. Eddie is your co-founder. A lot of
Yep.
founders who are just starting off, they usually start off alone, and then they look for co-founders or they bat around ideas. And many people struggle to find the perfect co-founder. What advice do you? How did you find, or how did you? I guess you met Eddie a while ago. And was he a natural choice for you to start something? How did that come about?
Yeah, so I've done this. I've done this. I think the right way with Eddie, and previously I've done this the wrong way in some other, but things that didn't work out. And for me, Eddie was natural in that we were already doing the work together in another context. And that's not always the case that you're going to be so fortunate to have that, but we were. And archetypically, we weren't the right skill set to be co-founders because we both have more of a business background. I was more product and business. He was more Bain consulting, private equity, operations. So typically you'd say, oh, you need like Alexi's role in a proverbial CTO type person. And I've done that before, and it's not enough. Just having that complementary skill set is not enough. I think what really makes a very strong founding relationship, and what made Eddie and I's relationship successful, has been you have to actually have just deep admiration and respect for what the other person brings to the table. And of course, you need to have some complementarianess. In our business, tech is really important, but so is operations because there's a coach network at its heart. And so it was pretty clear for me early on that actually Eddie brought the ops chops. He brought a lot of the analytical rigor, the thinking, the systems building that would build this business. But at a lower level, we had already de-risked the relationship. And I think that was a huge benefit here. We were working together, again, in a nonprofit setting, but we realized that we were just kind of natural yin and yang and complementary. We had a lot of energy and action working together and a lot of deep fondness or admiration for one another. And it's not unlike a partnership or a marriage. It starts with trust and respect. And I think trying to fast track that is risky, in my opinion.
Right.
And you want to make sure you can let that really marinate. And sometimes you just got to get in there and figure it out and see if it's going to work. But I caution from based at least in my own experience of just finding the archetypical I'm an X, I need a Y. I
Right.
think you can get yourself in a world of hurt versus saying like, who do I really think is better than me in many regards? And when they say something, I'm going to stop in my tracks and listen to them. and I'm going to really incorporate their feedback and vice versa.
Right. So there's the classic advice that many founders often hear is that if you're a technical person, go find a designer and then maybe a salesperson, and that's a team of three, and then just do it because that's what the market is looking for. I think you're
Right.
suggesting like be more organic and authentic, and your co-founder, of course, they should have complementary skills, but it is a marriage. You should know them pretty well and trust them deeply, because ultimately you're deciding to share a lot of equity with them, right? They're expanding the pie with you, and you must have a lot of
That's right.
belief and trust. For folks who don't have the benefit you've had of having worked with Eddie for a while, in the past, what have you seen other people do that might have worked? I guess part of it is
Yeah.
having some kind of a working history, some kind of a working relationship, like a trial period or something like that.
Yeah. Yeah. And, and when Eddie and I started, so, I think there's a couple of things tactically, practically you can do. And when Eddie and I started, he was at Haas doing his MBA. It wasn't clear. I was very clear, hey, got to be full-time to be a co-founder. I'm full-time. I quit my job. Like whoever's going to be a co-founder's got to be full-time. And he wasn't initially certain he could commit to that. He had a full ride at Haas, and that was a big deal to walk away from. And so the original thing was we were just hacking on this together. And if I was able to go fundraise, we were actually also looking for a third co-founder, like a CTO co-founder. And the idea was me and that person may get started. And then when Eddie graduates in 2 semesters, he'll jump on board. And actually, Eddie built the conviction where he was like, hey, I'd like to lean in now and quit my MBA and go full time. But there was that period where we were able to, in a really de-risked and kind of just, playful way, work together, no commitment. We were very clear. So I think whatever the situation is, clarity is your friend here. You want to be clear on what the parameters of the relationship are. We were very clear where it's like, hey, we're just going to see if there's something here versus, nope, you want to lean in and be a co-founder. For me, I was very clear with him on what were the requirements for any co-founder. There was no ambiguity. It's like, you got to be full-time, and
Right.
He understood that. And so that gave him clarity that like, until I'm ready to do it, I'm not. The other thing I'd say, whether you know the person or you don't know the person, even knowing Eddie, we had to do is, I think there's a whole values architecture you can skip over, which is like, it gets into very basic things. Why are you building a company? And there's a lot of valid reasons, as you know, to build a company. Like, this is capitalism. You could be building a company to get rich. That's a very valid reason to build a company. If that's the reason you're building the company, make sure your other co-founders are building the company for the same reason. Are you building a company to create an iconic company that outlives you? That's what Eddie and I both wanted to do. Okay, great. Like, are you aligned to that? Are you going to take this company public, or are you going to sell to the first person who offers you a couple $100 million? All valid, great answers, all contribute to economic GDP growth if done right. But where I think you can go wrong is by not having those conversations early on. And for 2 reasons. One, if you can't have those conversations early on, you should be probably worried about the person's ability to imagine and prospect. Like, if they can't really sit down and kind of like play out the decades, then they're probably not operating or thinking at the level you are as a potential co-founder. 2, you got to make sure there's the alignment, right? Like, this as an early stage investor, most startups fail because of founder dynamics, right? And so, do you have the long-term aims in view? Eddie and I have never, 10 years in now, had a conversation about selling this company, except for the first conversation we ever had that we were never going to sell the company. That's been the only conversation. And you can just like shut that part of your brain off. And, the offers come, the motions from corporate devs, and we're just like, we're not selling the company. The only way we'd ever sell this company is to like stave off a bankruptcy and like help employees, not go bankrupt. But that's a fail state for us. It's always been clear. This is about, okay, whatever the answer is for you, spend the time to get the alignment. And don't be scared to ask the questions. I think a lot of times we go into these relationships, we kind of don't want to know the answers because we just want it to work out. And that's where I've made the mistake before. And it's like, no, you really want to know the answer. Trust me. Like, you want to have the tough conversation now. It's not going to be tough, by the way. And if it's really tough and awkward, that may be feedback for you in the relationship anyways. But do that early and get very clear on what success looks like for all of you, how long you're going to be doing this, what fires you up, how do you like to, what's winning, whatever that is. Make sure every co-founder is aligned around that.
That's right. Well, alignment, trust. Even if you, so that's what's really interesting. What you just said is that even if you know the person, you might not have talked about this amount of in this amount of depth with them about what it would be like to
Why
work
would
together for
you?
decades.
Yeah, like
Yeah, there's
maybe
no
the person's
reason,
your
right?
best friend. Like, do you sit around and
Right,
say, hey, if we one day hypothetically were to start a company, like
right,
what
right,
would be your walkaway price? You know, like you should
right.
ask your co-founder, like if someone offered us $1 billion, would you sell? Like that, a lot of people would say, heck yes, I would. And that's a valid answer. For Eddie and I, the
Right,
answer was like, no. I mean, unless we
right,
were
right.
failing, we wouldn't sell. No, no way.
That's amazing. What do you think it was about the process or working with you when Eddie was finally able to give up his full ride? That it's a big decision on his part
Huge
to
decision.
sort of commit, give up on his sort of education, the full ride, all of that stuff. Not wait 2 semesters, but jump in now. What was it? What was it? Do you think at the time that gave him the
Well,
conviction?
it's even worse because by the time he did, he only had one semester left. So then I was just being, no, I mean, he respected, I was just holding the line. I was like, hey, I get it. We can like talk again in a semester. But if we were going to go now and I'm going now, like I'm trying to put the founding team together. We got the prototype. Like I want to try to go fundraise. I think it was belief and conviction in what we were building.
Mm,
And, I think there's two layers to that. I think Eddie and I's, if I can speak for him, our psychology upon reflection, and maybe this is good or bad, time will tell, you probably already know the answer, was it was never about us. Like we were convinced this tsunami was coming. Like we just saw it. Like it was clear as day. I mean, this was 2013, by the way. So it was not clear. Like the only thing kind of out there was mindfulness, but we were just like, this is all going to be about mental health in the next 10 years, everything in our culture, like from celebrities, how they talk about this to what employers invest in, to performance. And part of that was we had geeked out so much on the science. It was clear from the science that this is just how the world actually works. And we have this
mm,
whole like blind spot as a culture and pretending it doesn't work the way it really works. But I think it was that belief. Fundamentally, we shared a point of view and a worldview that this was inevitably going to happen. And that created a sense of urgency because then it was like,
right,
our earliest fears were not that we weren't going to succeed. We were pretty confident there was a chance we were never going to succeed. That was like,
hmm
we were like, statistically, we probably won't succeed, if we're being honest. We believe we're going to succeed, but like the critical part of ourselves is always like, this is a crapshoot. Um, it was that someone else would succeed.
right,
Our fear was that like someone's going to do this. We believed so much this was an inevitability. It was like someone's going to do it. We can see it. It was so clear to us. The fear
right,
was always that someone else would beat us to the punch. And we'd be
right.
sitting there when we're 70 and be like, we missed the moment. And so that I think was a huge compelling thing for Eddie is this belief. We lived in this reality of this is an inevitability. We've convinced ourselves. This is our new, it's not even something we have to convince ourselves anymore. We live here. We live in the future.
Right.
And then it was almost like this paranoia, for lack of a better term, that like if we don't do it, we're going to miss the moment.
Right.
Now, I mean,
Right.
honestly, if you ask me now, I could have started a company 4 years later, right? Like that trend in society took way longer to unfold than we thought. I think we were directionally right, but we were way, way ahead of it, right? In not a good way. That's not like a passive pat on the back. We were like too early in some bad ways, but I think it was that. And then I think it was the relationship. Like we really liked working together. So it was just like, I remember Eddie saying, like, I can sit here at Haas and like study how to build a company. I'm taking classes on product management, or I can come work with you and learn from a product manager. Like, he's like, at some point it just hit me. I'm like, I'm doing an MBA to potentially do this. And here's my moment. And
Right.
I just need to jump. I just need to jump at it.
That's great. That's great. And talking about the about ideas that might be a little early, but the space is right. What was that process like when? Because many founders, usually Silicon Valley is right on calling the trend, but timing is off. Sometimes it's early or late. Usually, and getting it right, timing is so hard. What was it like for you all in the early days as you were like investigating the space? Did you know like right out of VMware Social Cast exactly what you wanted to build, or did you want to experiment in a certain zip code with various different ideas?
Yeah. So I would say I had been experimenting zip code, similar ideas for a couple months before I started working with anyone. And so I was just kind of doing that on my own. And that included everything from looking, more around therapy to, just like a lot of these approximate places. Um, Eddie and I, by the time we were working together, we had really narrowed it down to like two components of what are still in BetterUp today. And it was really a question of like, where do we get started? We knew coaching would be a big part of it, and particularly using coaches who had a clinical background, who were working on some of these topics of well-being and leadership. We knew that would be part. And then we knew the micro learning would be a part of it as well, not traditional e-learning or courseware, but the more micro bite-sized learning. And so we were always wrestling with these two things. Which way do you start? The business people in us said, okay, we should start with like a freemium micro learning platform offering, and then we'll upsell you into the coaching. And we actually built that, and it was like beyond terrible and pathetic. It was Duolingo for life skills. That was like the one line sentence. And our first module was like conflict negotiation. And it was like so boring. I mean, you're like drag and drop. It just didn't work for a host of reasons. And we used like our 40K and friends and family funding to build that. And we were showing that to people, testing it. And we're like, oh, and at some point you can like unlock a coach. And everyone was like, well, that's way better than this. Like, that seems exciting. And so like we wasted probably almost a year of our life on like building the business model, figuring all of our CAC out on this like freemium thing to upsell to coach. And we thought it would be like this prosumer offering. And it turned out that, what was interesting and frustrating in retrospect is our original idea was to start with the coach, but we like convinced ourselves out of it with a bunch of Excel models, because we're like, oh, the economics are terrible. Oh, there's like a human in the loop. Oh, your gross margin will be low. Oh, no one will invest in this. All true, by the way. No one did want to invest in it for many years. So we weren't wrong there. But where we were wrong is we let a bunch of what I call business metaphysics convince us away from the core truth, which is you have to make something people want. And in our space, that means you're changing people's lives. And we should have started with what was most life-changing. And we eventually ended up there. And by the way, both pieces were in the final product that we went to market with, and both we always knew, but that was kind of more, it was not even zip codes. It was like within the zip code, which side of the block do you start on, was where we probably spent a year trying to figure out the right product offering. And it ended up that it started with coaching reinforced by micro-learning, which is now a very ubiquitous model, that you have a coach who gives you homework, who then follows up. I mean, like there's therapy apps, like everyone uses this model now. But that was really the first time that you had like synchronous coaching with messaging, with take-home stuff in that kind of video-enabled format. And it seems really obvious now. Great. That's usually the success of a mental model, that it seems stupid, simple, and obvious. Maybe someone else would have got it faster, but for Eddie and I, that was like a year of kind of wrestling, testing, wrangling to figure that out.
And as you were going through that process, as you were going from the original idea to making something work, and then back to the original idea, how did you come to that conclusion? Was it like you said something which is like when you pitched a customer, they basically said, "Why don't you just give me the coach?" Was it that you were kept hearing from your target customers? And how did you even pick who to talk to at the time?
Yeah, so we were doing focus groups, we were doing tasks, we were doing buying ads, driving to our landing page, doing the onboarding assessment. Like you're kind of interpolating all these data. It was actually desperation that I think provided the clarity. We essentially ran out of money. Our engineer had to go work for Amazon because we couldn't keep paying him, our iOS engineer. We had used our 40K and friends and family money. Ryan, our now CTO, was moonlighting for equity. He had a full-time job. We couldn't afford to pay him. And we were pretty much just like, well, we blew that one. We have literally nothing to show for this. We've spent about 2 years of our life doing this. We've tried to raise seed rounds, angel, no success beyond friends and family. And there was this nagging at us, this like, we never kind of did the original idea, which was like, start with the coach and have a relationship, and then that person give you some stuff, To be fair, the original didn't have the homework even embedded. We like mashed the two together. It was just like, start with the coach, and then You maybe had modules. I can't remember. It never got built. But like,
Right.
so it was kind of this haunting we had. And then it was
Right.
like, okay, like we got one silver bullet. We got a couple cycles from Ryan still moonlighting. Like we can't do it in a mobile app anymore. So it was this combination of like, we're desperate. We have no money. What can we actually afford to do cheaply? We have this unresolved like specter of we never really had the guts. I never had the creative courage to go with the original idea because everything rationally told me it was going to fail. But now I have like a year of data that kind of is like hinting that that may be the one thing. These little comments in focus groups where people's eyes were gravitating when they saw the screens and the mock-ups. The idea that we heard about, it's the relationships that drive behavior change from people when we talk to these self-help groups. So we're like, okay, you know what we're going to do? We're going to do it. We're going to spend like $5,000 on credit cards that we couldn't afford. We would PayPal each other off zero interest Cap One cards and fake stores. So we're going to do that to get enough Facebook ads. We can't even build a mobile app, so we're just going to use Google Hangouts. So we're like, let's do it. Let's do the coach. We're going to do Google Hangouts, Asana for the homework. Eddie and I are the matching algorithm. We text people between sessions. We got our friends who were like MBA students, a couple friends who were therapists, and that was it. We built it, and we had like one silver bullet. We're like, this thing, like, if this doesn't work, I don't know what we're going to do. We never really played that out because we never really had a conversation about quitting, but we were kind of at our wits' end, and it worked phenomenally well. People loved it.
Wow.
People
Wow.
were like, this is awesome. I love my coach.
Yeah.
I'm meeting every week. I'm doing my homework in Asana. And it was so much user friction. It's like the product version of me was like, holy moly, if they'll get through that, like we had a pretty cool mobile app that had removed all, and no one still wanted to use it. Here's something that like, if you wanted to design the worst user experience possible, we had achieved it, technically speaking. Click equity was like broken, you know, you're switching between applications. Think about that. You got to go from Asana to Hangout. It's like just terrible by every design standard, yet people are sticking with it. We were like, oh, okay. Like if they'll stick with this, imagine if we actually just made this work together in one app that was easy to use. Like we're probably actually onto something, which was really exciting and really frustrating because then we were like, we should have just gone with our gut. We just wasted a year of our lives, and we didn't really waste it. We learned a ton, but lesson learned.
Right. Creative courage is the word you use. Having the creative courage
Yep.
to do what you truly want to believe. It's quite remarkable that BetterUp, the company it is today, many times a unicorn, had those moments early on when you couldn't pay your developers and you're desperately trying to figure out something that would gain traction. And when you found that, when this sort of chicken wired experience eventually delivered. Do you feel something? Do you feel like this is it? This is the one. This it's going to take off. This is it. This is the right idea, and now I know exactly what product to sort of package it into.
I don't know that. I mean, maybe we're just bad at this. I never had that clarity. Maybe I was supposed to, but I was just like, I think we were more just like, okay, cool, like that worked. It felt cathartic because it was a little bit of like, yeah, we should have gone with our gut. That feels good, but you're also like, it burns a little because you're just like, I'm a real fool. I think we had the excitement and the energy, like, yes, this general formation works, but our brains were going on the million things we can do better. So I don't think we ever were like, oh, this is it. It was like, okay, yes, this is the pathway. This is it in terms of a mental model, but like, we're already cranking on, can we tweak it? Then we tweak this. So I don't think we ever had I don't know that there was ever like an aha moment, if that makes sense, where it was like, oh, it was more just like, okay, that was like a quantum leap and that's awesome. How do we continue to punctuate from here and keep going? And when you look in the rear view mirror, then it's like, oh yeah, that was a big unlock and an aha moment. But part of this is like the brain blocks trauma. So like, I don't remember most of this. Employees ask me all the time, like, I can't remember the first like 5 years of BetterUp because they were so painful and so miserable. Like I pretty much just blocked them all out, you know? So, it didn't feel good. It felt better than probably the sucky year before it, but honestly, like those were tough, rough times. And,
it was rough because
I don't think there was a lot of elation. You know,
right. It wasn't like you just spent a year trying to get to something, and it's now at least you had an outlet. At least some more sort of creative juices could flow through this channel.
I think that felt that. Yeah, I think
Right.
it felt
Right.
that. It was like pain relief. It was tough, man. Like we were racking up debt. Like I think by the time we raised our seed round, we were 75K in debt on credit cards. Like we were cashing out 401ks. Eddie was doing Postmates. Like it sucked, And like so I think probably the more lived experience was catharsis of like, ooh, some of that burden's been lifted. There is a glimmer of hope. This feels good. But we were like days away from just having to like we got to
Wow.
tell Ryan there's nothing here. So it was probably more like a weight was moved off our chest than like a
Right.
eureka moment. Even though it was a
Right.
eureka moment, I don't think that's not what I remember feeling. I remember feeling
Right.
like, "Ooh, we dodged another bullet. We live another day."
Right.
If that makes
Right,
sense.
right. Yeah, because it was like too much to expect that this is the breakout in that moment. Did you just say that Eddie did Postmates deliveries while he was working
Yeah,
to
I
sort
mean,
of
we had no
extend
money.
runway?
Like we were young. Yeah, we were young professionals. He had a full ride to Haas. I mean, and then he left, right? And that
Right,
he had his living expense like that. We still had rent to pay. I lived in San
right,
Francisco. He was living in like Berkeley Hills in a house with a bunch of his MBA students. So it was it was tough economically. I mean, we were all in. We were trying to do project work for friends to just kind of like feed ourselves. And then we needed a little money here to run our ad experiments, build little things here and there. I mean, necessity is the mother of invention, but yeah,
right.
it was challenging.
But you guys didn't give up. You were so
No.
obsessed with this idea, you didn't give up. What? Because I think you said something before, which is like you could tell that this is real. Someone is going to build it, so why not you? You just
Yep.
needed a cracker of an idea, and you found it, I guess, with this with the final play. What do you many founders grow through this experience? They remain committed to the idea, but eventually it doesn't work out. Most of the time it doesn't work out, and they have to move on to something else. What if you could dial the clock back, like what advice would you give to folks about what makes sense to continue versus what makes sense to sort of pivot or move away or to try something else? Like what is that? What would it have taken for you guys to make that call?
Yeah, it's funny. I had like never thought about this till we were maybe after our Series A or no, right before, maybe on the eve of our seed round. I was talking to a buddy who had been like an informal mentor throughout the process, and he was like, Lexi, when you started coming to me with your idea, there were like 5 or 6 other entrepreneurs I was advising or investing in, and all of them have quit. He's like, you and Eddie are the only people still at it, you know? Um, I don't know if he meant that in a good way or bad way. I think he meant it in a good way, but maybe he's just like, you should quit. I don't think he meant that, but I was like, maybe we should quit. But I'll answer the question in 2 parts because for Eddie and I, we just had decided early on we weren't going to quit. And we had been really inspired by some buddies who were officers in the Navy SEALs. We had done focus groups with these SEALs to understand their psychology. And, long story short, what we took away from them is quitting is a decision. It was really fascinating mindset for all of them. Quitting is a decision. You choose to quit buds. And it's like, well, what's your other option? It's like, oh, you just die in the water. That's the other option. It's like, okay. But we left that with a mantra of Eddie and I. We're like, we're going to be the cockroaches of Silicon Valley. That's what we called ourselves. We're going to outlast everyone. We're not going to quit. And we've still never to this day had a conversation about quitting. So on the personal part of the question, I don't know what the answer is because we just never opened that part of our mind. It's truly never been something. So even when that idea, it wasn't like we were going to quit. We may have to tell Ryan we can't, he probably should quit and go focus on his family. We were still committed to it. Like, and we just, it's like we were brain dead in that component. And in retrospect, it was a blessing because we never wasted psychic energy on should we quit.
Right.
It was always on that didn't work. We're cockroaches. What do we figure out next? How can we squirm through a smaller crack? Okay, we'll figure it out. On what I would advise founders, I think one thing that's powerful is to separate what makes great founders, if I could, wager a guess, is it's a combination of a unique opinionated point of view on the world and then a way to operationalize that and creates value for
Right.
people. But the two are different. And so, we were pretty fixed and confident in our worldview that was going to happen. Where we were agile and iterative and experimenting is in how do you operationalize that worldview, right? And we
Right.
still have a ton of ideas on how we can operational. We think what we're doing today is a fraction of the worldview.
Right.
And what I would advise founders is to get clear on disambiguating those two, because I think often it's easy to throw the baby out with the bathwater. And sometimes it's just that your hypothesis on operationalizing your worldview is wrong, but your worldview is actually right. And you don't want to give up on your worldview too early. And I've seen founders do that. I don't want to name names, but I've seen people who had the right worldview, who had an initial idea that was wrong, who gave up on it. And I've seen someone else come in with a slightly different idea and win the worldview, right? And you don't want to do that if you really believe in your worldview. And that actually gives you a sense of purpose, because it's not about you, it's about what's going to happen. It's about how you can benefit humanity. And so my humble coaching, although we didn't really, I think cognitively this was probably happening, but we weren't aware of it at the time, is be able to separate the two. And it's okay if your hypothesis is wrong. That happens in science. But
Right.
you have to almost have a faith-like belief in your worldview. When should you walk away? Either when you're tired of being wrong with your hypothesis, like you don't have the money, you don't have the energy. Sure, those are all fair decisions. Or you don't believe in your worldview anymore, right? Like if you fundamentally don't believe in the worldview and you've I've invalidated the worldview, then it's probably time to walk away from that venture. Eddie and I never got there. We were always, every failure made us more confident in the worldview. Even though our hypothesis was wrong in that experiment, it convinced us that the worldview was more correct. And I don't know if it should have convinced us. We could have just been crazy, but it did subjectively convince us. So we only picked up steam in terms of our depth of belief, even though we were just failing more objectively and being worse as founders. We were every time we failed, we're even more convinced we're right on the worldview, right? And that's what kept us going.
Right. I guess your journey was deep conviction on the worldview, and then lots of experimentation on operationalizing the hypothesis about how to get it done.
That's right.
How to get it out. I remember when we first met, you positioned the product and sold the product really well, which didn't exist at the time, which is imagine coaching but over video and over a Snapchat like interface where you're having a conversation, and there's an interface where they are asking you questions and you're answering, and there's a poll. It's a video as the template or the I don't forget how you described it, but I could imagine that is what. Yes, of course that made sense, right? But it probably took you some time and crafting to sell that idea, even though the product wasn't quite there yet.
Yeah, it took us time and crafting to sell the idea. I mean, the funny thing is we've now built that 9 years later, right? The reality is the market didn't want all that. The market and users just wanted video chat with messaging after. We had looked at, you're right, we were doing the overlay. We were doing we have that now. I don't want to steal our thunder. It's really cool. It's amazing. It tests well, but the market wasn't ready for it. They were just the idea of being able to live chat with a coach and message after, that was more than people could absorb. And so absolutely that's a case where we're still building things now where we're man, we had these ideas a decade ago, and they're just now seeing the light of day, not because we couldn't deliver on them, but because it's it just wasn't the right time for whatever reason. So the actual solution that won the day was a more toned down version of what we had pitched you. And at the time, we authentically thought that's what would do it. We had built that toned down version. We thought, oh, we're going to upgrade it. And as we went to do that, realized that's not what's creating value for our users. It's actually at that moment in the market a waste of time. We should just focus on the quality of the coaches, the quality of the interaction, the video chat quality, kind of these basics, and sometimes that happens in innovation. It's not this newfangled stuff that wins the day. It's just kind of reliability and ease of use.
That's right. Yeah, it's not the sizzle is great, but users sometimes don't. They just want it to work. They just want a problem solved, and and they don't care about it. The sizzle is great if it works, but that's not what they're after. They just want it to work, and sometimes founders. Confuse that, right? Sometimes founders, they do get confused. They get sucked into building the sizzle, but forgetting the basics, the simple stuff. Simple stuff doesn't sound exciting, but it works, right?
Totally, it works. And I think just there's product market fit. If you're a founder who's doing a venture-backed startup, there is investor product fit. And the two are not the same. And you kind of have to triangulate both. We had terrible investor product fit. We had really good product market fit, right? Like the market loved our product. Problem is no investor could believe the market would love the product. And
Right.
so some of that sizzle was probably in retrospect us over indexing and incorporating too much feedback from investors because that's what they thought people wanted, when actually what people wanted was kind of straightforward in retrospect.
Right.
And you need to navigate both, but like if you have to pick, you should always, eventually investor product fit will follow product market fit because the data is irrefutable. And that was our journey. Like we always raised our rounds late, as you will recall. We were always like an AAR threshold almost to the next round. We raised the
Mm-hmm.
seed at Series A levels, raised the Series A almost but that was because no one could believe that like the product market fit would actually work until there was like irrefutable data. I mean, you were an early believer, but most investors, it was like they had to see a ton of data because they're like, this isn't going to work. And I think that's the right choice. In a lot of businesses, investors are more tuned to the space. If it's a tech product, at its core infrastructure, they may be engineers, so they get it quicker. So those are more aligned. In our journey, those were pretty separate. And so one of the hardest jobs I had to do as CEO, was navigate like, where is this feedback from an investor actually
Right.
helpful, or where is it actually distracting us from the market?
Right, right, and that's another sort of common trap that first-time founders fall into, is talking to a lot of investors as part of the fundraising and taking their feedback to heart,
Yeah,
and not necessarily the customer's feedback, or because the investor is not as connected to the customer as the founder is, right? That's
right.
probably another. And sometimes it's hard to grapple with because customers telling you one thing, the investor wants to see something else, and so what do you do? Because you need their money, but you can't get
Yeah,
their money if they don't believe. So it's like a difficult position to be in. I guess the right thing to do is ultimately like listen to the customer, build what they want, and eventually everyone else will follow. That's what you are talking about
yep,
irrefutability of the ultimate traction data, right? Um,
yeah.
what was when you were first starting to selling to customers? Did you have a type of customer in mind? Some people think about, if you start with large customers, enterprise customers, cycles are so long, it's so hard. However, you might start with smaller companies, startups who might give you a try first, or individuals even might be even easier. How did you think early on about now that you had like the rough product idea now, it's the Asana plus Hangouts, and then
Hmm.
you and Eddie are the machine learning algorithm, if you will. Who did you take it out to? Which types of customers did you talk to?
Yeah. So first, we actually went prosumer. We were like adamant. Ryan, at that point, we had raised some angel money. Ryan joined as our CTO. He joined on famously two conditions: one, we would never sell to companies, and two, he would never have to manage people. So those both ended up being wrong. But Ryan and I had been at VMware together. We were at SocialCast together. That's how we had met. And so we were pretty paranoid that like selling to companies would kill the trust in our product, and companies would want inappropriate levels of data. And
Right.
um, but it was actually the user that brought us to companies. Like as we were coaching these prosumers, they're all doing it for their professional life. They're doing it at work. They're hiding in their car at lunch. And it was just kind of like, my now wife was an HR business partner at a large tech company and was like, I think HR would buy this. And I'm like,
Mm.
no, they're going to ruin it. And so that was kind of in the back of my head. And so um, we were either really bad at customer acquisition in like a prosumer model, but it was a moment of desperation. We were just like, we got this great thing. We're really bad at distributing it. I think to be fair to us, we were both bad at consumer acquisition, but also the market just wasn't there. But
Mm.
we saw this like holding context of the enterprise. And so we didn't know is the honest answer. So classic, Eddie and I didn't know a lot of things. He probably knew more than me. So we just tried it all. We're like, let's go to enterprise, mid-market, and SMB. And we did a smattering of each. And
Right.
we said, let's try to get 10 paid pilots and prove that people really want this. And we had some startups, small ones. We had some mid-market, and we had large Fortune 100 companies, actually, which surprised us. And as we went through that, what we realized is we're really good at the large enterprise stuff. Like Ryan and I knew that well, had been in VMware. We could get through penetration tests. We could like get through it in a differential way. And by the way, it's kind of the same amount of work. It's a little more in
Mm.
procurement, but like the setup's the same. Oh, and interestingly, they tend to have more sophisticated buyers who understand the value prop more. And so that was the big thing for us. The people are the same everywhere. Like, we just want to help people. So great, people are people in any of those segments. But it was interesting where, and again, we were kind of like, are we crazy? Like, traditional advice is go SMB, mid-market, bottoms up disruption. We're like, I mean, kind of all the data is telling us we should just go to Fortune 100 companies out of the gate if they're going to pay for this. And that's what we did. And that's kind of, now we do all the segments. We moved down market, but that's kind of, as you know, been the uncanny story of BetterUp is by the time we were in the groove and in market, we were selling to Fortune 500 companies, and we've essentially just stayed there. And then we've added new market segments.
Right. What was if you recall, what was the hard part about cracking your first enterprise customer? What was because many founders, what they worry about is that it's just going to take a year or two. So we'll put it on a slow burn while we bring on some other customers.
Yeah, and I think you can do both. We did both. I mean, we went out to try to get 10 pilots at the same time, and some of these SMB mid-markets launched before the enterprise had even signed, right? So that's like a real consideration. And I mean, look, the hardest part is early on, it's the selling, but I take a contrarian view on that. I actually think there's an understated advantage in selling to large enterprise, which is large enterprise will buy on product promise, meaning that they will buy on the idea, and they're happy to pay for a shop to build them something custom. So you can do it with integrity, and we certainly did. Here's what the product's going to have by the time you launch, and it's actually cheaper, I would say, in some ways to learn, because you're moving around decks, you're moving pixels instead of actually building all the real products. Versus smaller business is going to be like, well, can I just kick the tires today? And if you don't have it ready to go, that's really hard to do. And so we actually, I think in retrospect, used the latency in the sales process strategically to time our R&D process. So during the sales process, we got alignment on the features that enterprise would want. Then we knew it was going to take 6 months to go through procurement. And that gave us 6 months of development time to go deliver on that. And so we were able to stagger. But honestly, it's like legal and procurement. And I think this is where, as a founder, one of the first things we did was get Perkins Coie on as our law firm. So if you're going to do it, you can't kind of do it in a halfway. We had advisors who were early general counsels at Facebook, Google, angel investors. We pulled this talent in, and they were helping us craft 3-page MSAs instead of 30-page MSAs. No company would use it. They'd make us use theirs in the early years, but they were helping us understanding what red lines you could give on, what didn't matter. And that can be daunting. If you're a proverbial, tech founder, you probably maybe never had to do that, especially if you come from consumer. And so I do think if you're going to go large enterprise, you can't go in a half-baked way. You have to, whether it's you, whether it's your lawyer, you have to be, as a founder, I was a lawyer. That was my day job. I was just redlining MSAs, contracts, what can we give on a DPA, Ryan was doing InfoSec, right? And you have to be committed to do that. And it paid off in spades, but you gotta be willing to do it.
That's right. That's the work. You mentioned something about maybe it's an insight that you have that maybe other folks don't have, but I think I just want to pick on that a little bit. Product promise. Enterprises will buy on product promise. What did you mean by that?
Yeah, what I mean is enterprises know they have long sales cycles and deployment cycles. And so you don't want to misrepresent your capabilities, but you can go to an enterprise buyer and say, hey, here's what we're building. Here's the roadmap. They can buy on roadmap all the time. Here's where we think these features will come out. Is that interesting to you? Yeah, that is. Okay, great. We need to start buying now so you can get it in 6 months, right? And you can be very transparent. We were you're helping to fund the development of the roadmap you want, but you can get aligned on that roadmap. Is that yes, if you could build that, I would be really excited to deploy that or pilot that or test that. Great. I want to hear that. If it's well, build it and come back and let me know, that's a nice way of saying you didn't intrigue them. I used to tell the teams, if you have to build it to sell it, you're doing something wrong as an enterprise PM. You should never sell something you can't build. But from a causative model standpoint, they should be so compelled to want what you're promising that they're willing to buy today on the promise that comes in. And that's how big companies sell. They sell their roadmap with integrity and honesty. But you can do the same thing as an early stage founder. You can sell your roadmap. You can say, here's where the product is today. Here's what we're adding over the next couple months. is that exciting? And if they're not like, yeah, in fact, I'd like to do a paid pilot, that's how exciting it is, that's actually feedback for you. Don't build it. Go
Right.
figure out something else where someone is leaning in. It's not going to get more exciting when they see it, right? That's
Right.
the difference between a consumer and an enterprise. Enterprises typically are they're rational buyers. Consumers are emotional buyers at some level. They're evaluating on features, feeds, capability, functionality. Very rarely is it like, you told me you were going to do X and that sounded really lame and boring and I would never buy that. And then you showed me X and oh
And
my
then,
gosh. No, it's
right.
usually you told me that, it piqued my interest. Wow, that's really hard to do. If you could do that, that would make my life as a company really easy. Now I'm going to stress test, can you do it? And when it doesn't feel like that, as an enterprise founder, you got to really ask, do you have product promise fit? Because you're
Mm.
never going to get product market fit if the promise of the product isn't even exciting to people.
That's right. So even before product market fit, there's product promise fit, which is what you're looking
Yeah.
for, and you don't have to build
And
anything
it's
for that. You
cheap.
just have to.
It's
Right.
cheap. It's product marketing. It's
Right.
product management and product marketing. It requires 0 lines of code. I mean, when we would first go demo BetterUp, and again, we did this with integrity, we had a 1 screen mobile app that we would demo. And I would have to like then go to slides, change the talk track, and like, because that's all we had. And we then showed the rest of the app in like slideware, but not in the actual app. And we were very clear, like, this is going to go live, this is going to be there by the time we launch your pilot. And in one case, we had to delay a pilot and just like, hey, it's not ready yet. They were totally cool with it. Again, this is the advantage of enterprise. They don't sweat a week delay. They're like used to doing 18, 24-month software rollouts. And you don't want to use that in a bad way, so you become sitting on your laurels or you delay stuff. That's bad business. But you can use it and like you can stack those vintages of selling,
Right.
product development, infosec. We layered those vintages, so we weren't wasting any weeks, but we also were able to, parallelize things faster than just having to wait for every deal to play out completely.
That's fascinating. This is so cool. I can't wait for people to hear this. I want to sort of touch on another topic, fundraising. You've done a
Yeah.
terrific job of fundraising, over $500 million raised from some of the best VCs in the business. How do you? What advice do you have for folks who are fundraising? Like, what has worked for you that you think might work for others?
The best advice I ever got in fundraising was from Paul Graham, and I wish I had listened to it earlier. The best advice on fundraising is build a good business. It's really that simple. Like, there are some founders who are, I've never thought of myself as a founder. I still don't. I think I'm bad at fundraising. I mean, when you say that stat, I'm like, okay, maybe not as bad as I think I am in my head. But I was so bad at it in the early years. I think that's still where I'm still anchored to that. But the reason I was bad at it was probably one, because I wasn't good at it, but also because we had nothing to show. So it's like, what are you investing in? Really, the best way to fundraise is build a good business. Like, when you have data, when you have results, they become irrefutable. And I think, my biggest regret, there's a lot of regrets. One of my biggest regrets in building BetterUp is in the early years, I spent too much time trying to fundraise
Hmm.
off really just an idea, instead of spending more time setting up Hangouts and Asana sites and actually making progress on the idea. And I thought I needed more people to do that. I thought I genuinely needed the capital. It didn't come from a place of like, I want to say I raised a round. It wasn't at all that. But when I actually thought from first principles and we were desperate, and we didn't need any of that. We didn't really need money at all. We probably could
Hmm.
have saved a year of our life, me not doing, I think it was like 70 something pitches we got no's on in the first 18 months of
Wow.
investors. So it's like, that's a lot of time. We're trading the deck. I'm trying not to have a breakdown every time we get rejected, stay strong, stay confident. So my advice on fundraising is, it's really easy when you have something that customers want. It's really hard when you have to convince people customers will want this. Sometimes you have to in the early, but even in the early, my advice would be, how do you de-risk it? Can you do a small batch pilot like we did? Can you go buy ads and social conversion? The more you can get to traction data, fundraising becomes easier. If you
Right.
find yourself spending more time on your decks than you do on your products, probably time to do a little check-in on where you're spending
Right.
your time as a founder. And you probably see this all the time. You'll probably be more likely to invest in a founder who can't even fundraise. They can't communicate in a cogent pitch, but they've built something really cool, than someone who comes in, is really polished, beautiful deck, silver tongue, but you've literally built nothing. Like we built a
Right.
pro forma. I mean, you tell me, but we were kind of between those, but we should have been more on the, we can't communicate anything, but we have something to show. We
Right.
were spending too much time trying to communicate our point of view in this big grand vision and not enough time on how are we going to make traction to it.
Right. Right. So good. Good advice. We're going to move into our sort of
Sure.
final two sort of set of questions. This one is rapid fire. So it's about firsts. What was the first big mistake that you can share?
Oh man, so many. Well, I think the first big, they were kind of coexistent. It was what I just shared about probably over fundraising early.
Mm,
But I think the first big one was not going with our gut on the
mm,
product. It was coach first. I think the first big mistake was burdening that with a future business. In engineering, we call that premature optimization, right? Like
mhm.
we caused more downstream problems by trying to solve a future problem, but it wasn't actually a problem. And it got us off track. Instead of just honoring our intuition, honoring what we wanted for ourselves, we didn't want to use our Duolingo app. We just thought other people would want to use it. That was the first big mistake. We should have just done what got us excited to work together in the first place, which was, I'd really want to coach like this and we should build this for other people. And that I think was the first big mistake. We
Right.
recovered from it, but it cost us.
Yeah, yeah. And as you think back to more recently, after 10 plus years, and BetterUp is everywhere, and not just in the US, but overseas too. What brings you the greatest happiness or greatest sense of achievement, let's say in the past year or so of BetterUp, something that gives you conviction about how big this could be?
It's the, we call them members, our users. It's the members. I mean, Eddie got an email from a coach who forwarded him a note from a member the other day. He read it at all hands. I mean, we were like, people were crying. It's just so, I mean, they like, we literally change people's lives every day. That's not hyperbole. And we hear about it unsolicitedly. Helping people, coach them through chemo on cancer, helping people through some of the darkest moments in life, death of a loved one, some of the brightest moments in life. I found out a story recently in the last year. There was an EA at one of the world's largest tech companies who had access to BetterUp, and she aspired to become a PM. This was like a laughable goal. She didn't go to an Ivy League. She's not an engineer. She's a EAs are amazing. She's a lowly EA in that culture. She worked with her coach and in under a year became a PM. Like the first time an EA had ever gone to a PM. That's like life-changing difference in her future, her own sense of self-accomplishment, her economic outcomes. I mean, she's probably making 4 or 5 times as much as she was, given how this company pays. So it's those stories. And that's something that Eddie and I were clear on early on from our nonprofit work. We used to call it the moral salvage value of BetterUp. We said, hey, even if we fail, the moral salvage value here is so sweet that we will be happy with ourselves. If we only impact 100 people the way we did with these first 25 users, we can like pat ourselves on the back and say like, that was worth our time. Whereas some businesses, especially venture back, they're binary zero sum propositions. Like they either work when you hit 1 billion users and it changes the world, or they never get there and they don't. And that's how VCs are set up. We didn't love that as a founder. We wanted to contribute to something that even if we don't succeed as a business, we'll feel we have given back to humanity. And so that moral salvage value, will BetterUp be a successful commercial? It seems more likely than not that, at this point. But I can already tell you, we have literally changed the lives of hundreds of thousands of people for the better. And that's something we will go in the grave knowing. And
Right.
that's really, really powerful.
And it started with 25 very
It
early
started with
when you
25.
first, and now
Yeah.
thousands of people. That's quite amazing. I gotta ask, like, what makes you good at this? What makes you good at running a company, pursuing a vision, and you have lots of employees now, many customers, lots of responsibility, very different from what it was when you first started 10 years ago. What do you think makes you good at this?
Well, I don't know if I agree with the proposition. We'll see. Time will tell if I'm good at this. Um, I mean, I think it's our own medicine, man. Like, I remember early on someone giving us feedback. They meant it in a really helpful way. It was terrible feedback, and that happens all the time. That we had too many advisors. And they're like, it kind of makes you look like you can't run your own company because you need so many advisors. And I remember thinking, Well, I can't run my own company. That's why I need so many like, I mean, duh. Like, if I knew it all myself, I wouldn't need help from people. That's kind of the whole point of our business. I naively thought investors would look at that and be like, that's a sign of strength that you need all this help and that you can enlist some of these great luminaries. They took it as a sign of founder weakness that like, hey, so I think if we're good at it's simply that. It's like, I have an amazing board of directors. I have an amazing network of advisors, people like you who are some are investors, some are non-investors. I am daily talking to multiple of them. Like, that is not an exaggeration. And that has always been the same. It used to be mainly out of sheer desperation because we had no idea what to do some days. But I think that has allowed me, at least personally, I'll just speak for myself, to continue to scale and grow with the business because I'm able to talk to people who have been at the next horizon and the next frontier. Right. And it's coaching, it's mentorship. It makes you elastic. It makes you be able to scale in ways that are otherwise impossible. And that's what we've now tried to bring in the product with our extended network. You don't just have one coach, you have access to coaches across 11 different verticals. And in a way, it's just mimicking and mirroring my experience and Eddie's experience, which we've been fortunate that for any legal, IT, anything, there's one of the best people in the world. This is the beautiful part of Silicon Valley, is able to lean in and quickly educate us on where we need to get smart. And so if anything, I would say it's just that porousness of being open to that help and pulling it in. And I think I just maybe naively thought that, that was strength. And I got a little lesson, and some people view that as weakness, whatever, don't really care at this point. It's working for us.
That's great advice. And then final question is again, looking back sort of 10 years when Alexi and Eddie were just getting started, if you could give advice to those two founders with the benefit of hindsight, what would you tell them today? Not just the early days, not just,
sure,
like speed up, like focus on your gut, but like having seen 10 years, what would you tell them?
Well, in the exact moment, I'd say, hey, dum-dums, stop fundraising, go build your product. So we already talked about that, but that would be my immediate advice. I think more longitudinally, I mean, it's a cliche, but it's true. And it's specifically true. It's extra cliche because of our business. It would be, it's about the people. This stuff is all about scaling, which means it's all about the leaders. It's about your direct reports, your lieutenants. And I think feedback I'd give myself is be more intentional with making sure you have the right leadership team at every stage. And be very clear with yourself if that team is pulling you or if you're pulling them. Even emotionally, what does that feel like? And in the early days, you have to pull, but as you have the means and the financing to bring on seasoned operators, you need to really ask yourself, am I still pulling these people forward? And there's always going to be a little bit of that. You're the founder, you're probably the visionary, or am I learning from them? Am I getting the best idea in the room is coming from them? And I think, we always liked our leaders, we liked our teams, and we probably held on to folks longer than they were really pushing the business forward coming from a good place. But that in retrospect slowed us down. And I think the emotional litmus test of that is this feeling of like, are they pulling me in a way or am I pulling them? And lots of years of probably less productive time than it could have been had I been clear on that earlier.
That's great. Alexi, you've been so kind with your time. I'm just so excited to have some of the things that you've said broken down into nuggets, because this is so valuable. So many new sort of insights, I think, especially for people who are just getting started. So I want to sort of properly thank you for taking the time to chat with us. And in closing, I want to thank everyone who's been viewing this and let you know that we've had the good fortune of backing companies like BetterUp and Alexi and several other founders. We're a pre-seed stage fund. We've been around about 7 years. Afore Capital. Please follow us send us your pitches. Earlier the better. We've had the good fortune, obviously, of investing in BetterUp, and then companies such as BetterUp have gone on to raise about $2 billion after Afore, and nothing is too early. Please do follow me on Twitter. My first name, Anamitra, on Twitter, and our website is afore.vc. And we want to put more of these episodes together. And thank you once again to Alexi for taking the time to share your perspective with all the founders who are just getting started. 10 years where you were back in the day. Thank you so much.
Well, thank you. And you guys have been an incredible partner for all the founders out there. Anamitra and Gaurav are the real deal. Early on, you want founders who understand markets and products, and it's really rare to have a fund that's as focused on that and your vision as Afore. And they're a small check at this point on our cap table, but they have been one of the most outsized value-add investors we've had in our history. So it matters so much early who your investors are. The wrong investors can do as much damage as they can do help, and you can't go wrong with these guys. So I would encourage you to just lean in and learn from them and build with them and have a ton of fun together.
Thank you, sir. Thank you so much. With that, farewell all.